These dealers don't care if you can't afford a car. And when you can't, the whole business model actually works better. I'm talking about buying here, buying a lot here. Used car dealers who sell cars to you and finance their own loans. No banks, no credit unions. No middleman stands between them and your wallet. According to a report released by the Federal Reserve in May 2026, subprime borrowers on one lot paid an average of 25.39%. It is not car loans, it is credit cards, attached to a depreciating asset, held with prayers and brake pads. Worst of all, it is all perfectly legal. Let me show you how the whole process actually works. Here are the basics. A buy here, pay here lot, or BHP. If you want to sound like reading FB, iNotes for fun. It is a used car dealer, and the dealer is also a lender. You walk in the parking lot, pick a car, sign a contract. Then in the next 4 or 5 years, you'll go back to the same location. Sometimes a cash payment is required every week. That is where the name comes from. You buy here, you pay here. These companies have existed since the early 1970s. But modern industry did form in chains, like the American auto market. Opened its first store in Bentonville, Ark, in 1981. Next came J.D. Birida, now Birida. It was introduced in Indiana in 1989. Today's biggest player is DriveTime. By the end of 2013, the company operated 117 dealerships in 20 states. There are more than 150,000 active loan contracts on the books. No one expected how fast the market would grow in this corner. According to the Fed's analysis in May 2026, BHP Billiton's loan balance has jumped 214% since 2018. Traditional automobile finance increased by only 34% in the same period. BHP Billiton is expanding more than 6 times as fast as other auto loan markets. Here is why. Let's talk about who landed on one of the lots. The 2014 CFPB consent order for DriveTime clearly identified ordinary customers. A person with an annual income of $37,000 to $50,000. FICO scores range from 461 to 554. This is a deep subprime mortgage, the kind of credit that traditional American banks can't reach. Fed data confirm that this is the rule, not the exception, as about 77.5% of BHPH loans went to subordinated borrowers. By contrast, traditional banks account for only 27%. In 2025, more than half of BHP's loans went to deep subprime customers. A credit score of less than 580. They were single mothers, nursing assistants at home. Factory workers work 2 shifts, restaurant managers, those who need cars to keep their jobs and have no leverage as soon as they enter the door. The industry knows that, and they say it out loud. Here is what a BHPH consultant named Chuck Bonanno said. Filmed at an industry conference in Las Vegas, the Los Angeles Times reported. Our clients don't have money, he said. He had no plans. He won't pay unless you force him. It is not a leaked memo. It is a public business philosophy. So how to squeeze payments from customers? You already know you may not be able to afford a car. You build the whole loan around that assumption from the start. The first lever is interest rates. Federal Reserve data show that subprime BHPH borrowers paid an average of 25.39% in April. Subprime borrowers at traditional banks pay about 14.6%. The high-quality borrowers of regular distributors only need to pay 5.65%. A BHPH customer paid nearly 5 times the fee, the price paid by a reputable buyer for a similar car. The second lever is the payment schedule. About 14% of subprime BHPH loans need to be paid weekly or bi-weekly. At traditional banks, the number barely exceeds 0. The Fed said bluntly that more frequent payments create more missed payments. It sounds like a bug until you realize it is actually a function. The third lever is the price increase of the car itself. We have a real example of this. Bankrate reported in February 2026. A 50-year-old home care assistant in Texas, named Tory Holmes, life. In April 2024, he walked into a parking lot and picked out a 2020 Chevrolet Equinox. Sticker price, $21,695. About $7,000 more than the same model with similar mileage. Sell online. Then they layered the added value of $4,000 $465. For example, gap insurance and extended warranty. She did not fully understand. Her down payment was 3.6%. Her APR was 20%. Her credit score was around 525. A month later, when she figured out what was going on and called Bridgecrest, this is DriveTime's internal financing unit. They offered to refinance the loan by $1,000. The problem is she doesn't have $1,000 because she just spent her money on the down payment. They saw me coming a mile away, she later said. That is what is really ugly about the model. Because dealers don't actually need you to pay off the loan. They just need you to start. Industry data comes from the National Alliance of Dealers, who buy here and pay here. This is the trading block itself, not some critics. Indicates that about a quarter of BH customers default. In any normal lending business, a default rate of 25% would be catastrophic, but in BHP, it blends directly into math. That is why it works for them. When you default, the dealer takes back the car and claims for losses for tax purposes. Roll the same car back into the parking lot. A new buyer walked in and made another deposit. Take another high-interest loan, and the cycle begins again. The Los Angeles Times pulled DMV records from 3 states and found that this happened on an industrial scale. A dealer in Hawthorne, Calif, called me, and I wasn't making this up. Take back car sales. Each vehicle has moved at least 130 more since 2008. Neil's Financial Plaza in Kansas City has resold nearly 900 cars 3 or more times. 4 of them were sold 8 times. Dale Irwin, a car fraud lawyer in Kansas City, was blunt when he told the Times, once they get the payment from the first buyer, everything else matters. They can charge $25,000 for a $2,500 car. The Federal Reserve S 2026 data support this in terms of cold statistics. BHP Billiton S loan is 16.6 times more likely to be in a state of active recovery, not traditional car loans. About 5% of BHPH balance is actively recovered. Third quarter 2025. How did they get their property back so quickly? The answer boils down to 2 letters, GPS. Most BHP8 cars are equipped with a hidden device called a starter interrupt, or, as industry insiders say, a kill switch. The device is connected to the ignition switch and a GPS signal. That is, if you default on your payments, the dealer pushes a button and your car refuses to start. A Colorado company called Pastime GPS. The company has sold more than 1 million such devices to about 3,500 plots. That was the number reported in 2011, and use has only since expanded. The CFPB documented the severity of the situation. In August 2023, the agency sued a service provider called USASF, bundled with a chain southeast of BHP called US Auto Sales. According to the lawsuit, USAF incorrectly disabled customer vehicles at least 7,500 times, trigger the warning tone in the car more than 71,000 times, when the customer does not actually default, and shut down the vehicle at least 1,500 times, after a clear promise to customers not to. Rochette Chopra, the director of the CFPB, summarized the case. The CFPB is suing USAF for a series of misconduct. That includes illegally activating devices that prevent borrowers from starting cars. The New York Times documented one case in 2014. When the borrower's car was banned, she was only 3 days behind on payments. If the kill switch doesn't catch you, the collection department will. CFPB S 2014 campaign against DriveTime. This is the first time that CFPB has taken enforcement action against BHPH dealers. According to reports, DriveTime employs 290 collection agents in 2 domestic call centers, along with 80 other Barbados contractors. There are tens of thousands of phone calls every weekday. One client made the 30th of September 8 phone calls at the workplace. After she told DriveTime to stop, the company also asked each borrower to list at least 4 personal recommendations: loan applications, friends, family, colleagues. Then, whenever they owed money, they harassed the references for months. DriveTime paid $8 million in civil penalties for the bill. Richard Cordray, then a director of the CFPB, said, "Driving time harassment hurts countless consumers." he said. Many are economically vulnerable. This is not limited to small carriers. In January 2023, CFPB and Attorney General Letitia James of New York jointly sued Credit Acceptance, one of the largest subprime auto lenders in the United States, accusing companies of hiding the true cost of loans. A bankrupt borrower. Massachusetts has reached a $27 million settlement, starting with Credit Acceptance in 2021. That is the biggest, guaranteed by Mueller-Healey, then the Attorney General. But it was a turning point. In April 2025, under the leadership of the new leadership, CFPB asked the court to completely dismiss the Credit Acceptance lawsuit. The agency separately proposed scaling back its sweeping oversight of auto lenders. At this moment, the default rate of subprime mortgage instruments has reached a record high of 6.6%. Fitch said January 2025 was the worst data in more than a decade. Federal law enforcement is quietly shutting down. Beneath all this is a bigger story. In September 2025, Tricolor Holdings, one of BHP's biggest lenders, filed for Chapter 7 bankruptcy. Tricolor specializes in lending to Hispanics and creditless check buyers in the Southwest. The Justice Department is reportedly investigating fraud. That includes accusations that the company pledged the same collateral to multiple lenders. The fallout hit Wall Street directly. JP Morgan, Chase 53 Bank, and Barclays disclosed combined losses could reach hundreds of millions of dollars. Fifth Third alone reported an exposure of $200 million. Since 2022, Tricolor has also sold nearly $2 billion in asset-backed securities. This means that these subprime auto loans are bundled together and rated investment grade and sold to mutual funds and pension funds and insurers across the country. If that pattern sounds familiar, bundled bad debt rating AAA, borne by ordinary investors. That is the right thing to do, because it is the exact same strategy that set off the housing market in 2008. The Fed actually warned of this overheating as early as 2011. Nobody listened. It is all for us. Industrial defense. As every BHP executive in front of reporters said, they serve people that banks don't serve. Jeff Williams, chief financial officer of the US auto market, described his company, the good guys in the industry. Hiding is a practical argument. About a quarter of low-income American households do not have a car. Federal or state-designed projects are also rare. Help poor working families afford reliable transportation. What would these customers actually do without BHPs? The comparison comes from John Van Alst, a senior lawyer at the National Consumer Law Center, has studied the issue for 2 decades. His view is to buy a car. Is it really the most complicated transaction or a financial transaction? Most consumers will participate, he said. The whole system is consumer-oriented. The only person on the table who didn't have that information. If you see one thing in this video, it is it. When your credit is bad and you need a car, almost all other options cost much more than buying and paying here. Obtain the prior approval of the credit union before setting foot on the dealer's lot. Look at private party sales. Look at non-profit car projects, about 160 of which operate nationwide. If you end up in the dealership, write down 2 numbers before you go in. The actual market value of the car and the maximum monthly payments your budget can absorb. Then he refused to move. Dealers have run scripts thousands of times. You may have done it 3 times in your life. Land sections, banners, financing activities, payment schedules, add-ons, even GPS chips attached to the dashboard, aimed at winning the deal twice. One signed, the other couldn't afford it. This is not a loan. It is a trap with a steering wheel. Thanks for watching.